Nearly 95% of retail traders in the Forex market lose their entire capital. Why? Because they treat the market like a casino. They guess price directions, use dozens of conflicting indicators, and panic whenever major news breaks. What you see on my screen right now isn't the result of luck. It is the product of a boring, mechanical system, perfect in its monotony. In just 1 week, this system generated over $48,000 from gold price movements by capitalizing on something most traders avoid: the high volatility surrounding economic news releases, such as the New York CPI, and the transition between the London and New York trading sessions. Today, I'm not here to sell you a pipe dream. I'm going to break down the pure logic behind how market algorithms operate and explain why a simple tool like Fibonacci, when used correctly, can become the most lethal weapon in your portfolio. Let's break down what happened in the gold market in mid-July. When the New York CPI economic data was released, most traders saw that massive vertical candle and immediately thought, "The market is extremely bullish. I need to jump in." That is where the mistake lies. Institutional markets do not move based on emotion. They are driven by liquidity. When prices surged sharply to the upside, major institutions were actually seeking the optimal zone to place opposing positions, trapping retail traders who were late to the trade. Look at the Fibonacci expansion levels shown above, levels 200 to 214.2. This is the exact area where we, a small group of professional traders, systematically executed multiple sell positions, 0.40 lots, across several trading screens. Why? Because we knew, based on session algorithm calculations, that this zone marked the limit of price manipulation before a major correction occurred. Many people say, "I tried Fibonacci, but it failed." Why? Because they draw Fibonacci lines from arbitrary peaks and troughs on the chart. The key to this advanced method is time synchronization, the session bridge. Fibonacci does not work in isolation. It must be drawn based on the exhaustion point of market session, which is then confirmed upon the opening of the New York session. Look at this chart. When the price dropped sharply, retail traders panicked, thinking the trend had turned bearish. However, according to our system, the price was actually returning to the golden area, specifically the Fibonacci support level at 76.4. When the price touched this blue line with pinpoint precision, our system automatically triggered repeated by 0.40 orders. The result? The price bounced back instantly without incurring any significant floating loss. Risk was managed strictly, while the take profit T/P target was set at a mathematical level that was guaranteed to be reached. If this method is so accurate, why isn't it found in free YouTube tutorials or popular trading books? The answer is simple: the law of market probability. If everyone used the same tactic, it would lose its effectiveness because market makers would alter their algorithms. The Forex market is a zero-sum game. For the top 5% of traders to consistently withdraw payouts of tens of thousands of dollars each week, there must be 95% of traders who lose their money due to incorrect guesses. This system is classified as an advanced method due to its uniqueness, scarcity, and precise timing. We do not chase hundreds of pips every day. Instead, we simply wait for 1 or 2 boring setups that offer a win probability exceeding 85%, combined with strict risk management.
Trading with a small account or a capital of just a few $100s using this method is a waste of time. This method is specifically designed for those managing substantial capital. Whether it involves significant personal funds or a prop firm account funded with hundreds of thousands of dollars, where the accuracy of a single trade can instantly recoup the entire cost of your educational investment. Due to the highly exclusive nature of this method and the requirement for intensive guidance, I do not conduct mass classes. I accept only 2 private students per month, providing personal mentorship until they are able to replicate the system independently. The investment for this private mentorship is $2,000. If you possess sufficient capital and a high level of discipline and are ready to stop guessing market direction, please contact me directly via private message on Forex Factory account, Scontist, or email to bmine1526@gmail.com. Please use the subject line, "Ready for systematic trading." We will schedule a brief evaluation session to determine if you are a good fit for this system. Thank you for watching, and I look forward to seeing you in the private mentorship program.